US consumer confidence hits a 4-year low. What does this mean for the economy? Breaking news. Consumer confidence in the US has dropped to its lowest level in 4 years. With rising inflation, tariff concerns, and economic uncertainty weighing on households, Americans are spending less, saving more, and bracing for potential financial challenges. But what's really driving this decline in confidence? Are we heading for an economic slowdown? Or is this just a temporary dip? Today, we break down the latest consumer confidence report, the impact of trade policies, and what this means for you and your finances. Let's dive in. Why has consumer confidence fallen? According to the latest data from the Conference Board, the Consumer Confidence Index has dropped sharply, hitting its lowest point since 2021. So what's behind this decline? Tariff concerns. With the US considering new trade tariffs, businesses and consumers are worried about price hikes on goods like electronics, automobiles and food products. Inflation pressure. While inflation has cooled compared to last year, the cost of essentials like housing, healthcare and groceries remains high, making it harder for households to keep up. Rising interest rates. The Federal Reserve's aggressive rate hikes have made borrowing more expensive, discouraging spending on big-ticket items like homes and cars. Job market uncertainty. While unemployment remains low, layoff announcements from major corporations like Morgan Stanley and Tesla have created fears of a slowing job market. Clearly, there's a lot of uncertainty right now. But how bad is it? What are the key economic indicators saying? Retail sales. Consumer spending has slowed down, particularly on non-essential goods like electronics and clothing. Stock market volatility. The S&P 500 has seen significant swings in response to concerns about inflation, interest rates, and economic growth. Credit card debt. Americans are relying more on credit cards, with average balances reaching record highs due to high interest rates. Housing market cooling. Mortgage applications have dropped and home prices are stabilizing as buyers struggle with higher borrowing costs. The data paints a mixed picture, but experts are divided on what comes next. What are experts saying? The Federal Reserve remains cautious. We are closely monitoring consumer sentiment and adjusting policy as needed to maintain economic stability. Wall Street analysts warn of challenges ahead. Consumer spending is the backbone of the US economy. A prolonged confidence decline could slow growth significantly. Retail executives are preparing for lower sales. Shoppers are becoming more selective. Retailers must adjust pricing and promotions to keep customers engaged. So, what does all this mean for you as a consumer, investor, or business owner? How will this affect everyday people? For car buyers, higher interest rates on auto loans mean it's more expensive to finance a new vehicle. If tariffs increase, expect higher car prices as well. For homeowners and renters, mortgage rates remain high, keeping housing affordability a challenge. Renters may also see rising costs if landlords pass on expenses. For investors, market volatility is increasing, meaning it's important to diversify investments and monitor economic trends closely. For shoppers, prices may continue rising if tariffs lead to higher import costs. It might be a good time to shop smarter and look for deals. So, what happens next? What can we expect in the coming months? The Federal Reserve may pause or adjust its rate hike strategy if consumer spending slows too much. Retailers could introduce bigger discounts to keep consumers engaged and avoid major revenue drops. The government's decision on trade tariffs will play a major role in determining inflation trends and business confidence. One thing is clear: the next few months are crucial for the US economy. Final thoughts. Should you be worried? Is this consumer confidence decline a temporary reaction or a warning sign of deeper economic trouble? Should the Federal Reserve change its policy, or is the economy resilient enough to handle these challenges? We want to hear from you. Are you feeling less confident about the economy? Are you cutting back on spending, or are you still optimistic? Drop your thoughts in the comments. Do you think consumer confidence will bounce back, or are we heading for an economic slowdown? Like, subscribe, and turn on notifications so you don't miss the next big market update. Stay informed, stay ahead, and stay prepared for what's next.